Let's talk. You want to talk about Netflix?
What shows are on Netflix? Or no,
No, I think since it's an investment show, we got to, and I go through spurts and so forth. I've not watched Netflix in probably about a month, and then I'll start watching it again. So many options. But let's look at the numbers of Netflix. Their symbol is NFLX in the entertainment energy. Not much short on that, 1.9%, 87% institutional owned. We do see, and I love Netflix, but still a high PE ratio of 52. But the industry of, again, entertainment has no PE, so no earnings there. Price to sales are expensive, 12 versus 2.5. Price to book value, 19.5 versus 3.4. Price to cash flow, 61 versus 18.8. And the PEG ratio looks okay. It's 1.5 versus 2.5. And they do have a lot of potential growth going forward is why things are so high. And they've had in the past, the earnings are up 46%. Over the last year, but the industry was up 118, which surprises me on that. Sales to Netflix do look very good, up 15%. The industry is only up 0.5%. The 5-year growth rate for Netflix is 28.2, double the industry at 14.7, so that's not a surprise. They don't pay a dividend. They've been around for a long time. They still don't want to pay out that dividend. I might want to look at the balance sheet to see what they got for cash there. Current ratio 1.2, that's below the industry at 1.9. You wouldn't want that higher. All the growth. Their debt still looks good, 0.6 versus 2.3. Net profit margin, wow, 23.1 versus a -1 for the industry. So that's very, very good to see that. Return on equity, 38.6 versus 17.3. The free cash flow in dollars was $7.4 billion versus about looks like about 5.5 billion for the industry. What do you got going forward?
Yeah, so current price here for Netflix, again, their ticker symbol is NFLX, $1,101.53, 52-week range. The stock's been a huge performer. The low here, $544.25, and the high, $1,106.80. Actually did achieve that here on Friday. Going forward, though, this is the problem with Netflix. You kind of mentioned the overvaluation here in terms of what the multiple is.
Did you miss a 10-year return?
I didn't even give the 10-year return. What is that over the last 10 years? You got it. So
I got it. 1,279%. You've held it for 10 years. You got to pat yourself on the back.
Yeah. But the concern is over the next 10 years, what is it going to look like?
Yeah.
It's an intriguing story, and I don't know where that growth is coming from, but it's definitely expensive. You go out to December 2026, I see estimated earnings per share here of $30.82. Gives a target sell price of $511.61. It's trading at over 35 times those future earnings. But what I'm talking about with this future growth, and I don't know where it's coming from, is earnings are estimated to grow about 29% this year, 20% next year. So, the company is still growing, and I don't know if it's this ad tier that they've added where they've really been able to add additional income from that, additional sales, but there's something they're doing that, they're running the business very, very well.
You got to say congratulations to this company because they have done a good job. I don't, like you, know where the growth is going to come from. I was taking a quick look at their balance sheet to see what they got in their cash account here. They've got about $8.3 billion. They've got a lot of cash. Or cash flow is positive. It's just and I would love to own this company. I think it's a great business. But I can't pay this type of price for a company. We're a value investor. We do look at what you pay for something. And this always has come back eventually to hurt you when you overpay for something. Could it be tomorrow? Could it be next year? 5 years? I don't know. But, great company, very pricey.
Yeah, and I was going to say real quick, they did a great job. They topped earnings. They topped cash flow, topped sales. They did also say that they're expecting to hit a $1 trillion market cap by 2030 and double revenue. I don't know how a company says we're going to double the market cap to $1 trillion. I'm going to say a ballsy estimate there.
That's